I'm Ian Grant, and you are listening to The Mortgage Show here on Newstalk 1010 with the team from Cannect, the best mortgage now and forever. Check out connect.ca. And I am joined by Marcus Ferris. You may have heard him at the beginning there going, "Whoo," in the background. He's got nearly 20 years of experience dealing with both investors and borrowers in the mortgage industry. Founder and CEO of Cannect, Marcus has been a pioneer in the mortgage industry since the early stages of his career. And also today, Justin Turner is here. Justin, with a decade of experience in customer service, sales in various fields. He is currently principal broker and manages a team of account managers to provide industry-leading customer service that Cannect is known for. You have a mortgage question, this is where you will get your answer. Phone lines are open, 416-872-1010, 416-872-1010. Gentlemen, welcome in. Thanks for joining us.
All right. Thanks for having us.
How's it going, Ian?
Great to have you guys here, and thank you for doing this again. During the last show we did, we got a great caller toward the end of the show at 416-872-1010, and she brought up something, and I was listening, I was getting madder and madder, not at her, but at the situation. She thought she had a HELOC. Unfortunately, after you talked to her for about 30 seconds, you realized, no, you don't. You have a mortgage. And what I wanted to talk about, but kind of ran out of time during the last show, was that for a lot of people, they honestly, and I'm probably one of them, they honestly had no clue what they were signing. People are pushing pages at them. They want to get the money. They want to get the house. And therefore, they're just signing like a mad person. I have to imagine that they're walking out of that institution, and if somebody said to them, "What did you just get?" they honestly don't know, and it can be an awful lot of money. I want to tie that into some of the Google reviews that you get, because one of the things that really sticks out is the time and energy that you invest with people and making sure that they get exactly what they need.
Yeah, listen, I'll tell you. What's even more interesting about this, and the reason why so many people find themselves in this situation, is that the people on the other end that they're dealing with at the bank branches, it's not their fault. They're only trained in specific products. They're only taught how to serve a client's needs with certain tools. And unfortunately, those tools are provided from those banks. So we saw this about 6 or 7 years ago. There was a CBC Marketplace piece about this where the banks were pushing something called collateralized mortgages. And consumers had no idea what they were signing. They were going into the branches and they were being told, we're going to register a collateralized mortgage obligation on your home. Borrowers were saying, well, I mean, you're my banker. It must make sense. It must be something I should do. When in actual fact, what they were doing is they were signing a document that was saying that a mortgage was going to be registered against their home for more than the amount that they were borrowing, for the total amount that the house was worth. This is just one small piece of a bigger puzzle that's available if you really take a look at the Canadian mortgage market. But it speaks to the point that when a consumer has little choice because they only deal with their bank, and little knowledge because they're only accepting the knowledge from their bank, the deck's stacked against them. It's really, really difficult to come out and win against a bank when you're negotiating. And I mean, to drive that point home, like all we're built for at Connect, the reason why we spend so much time with each and every one of the people that call in, anyone that, whether they're using our services or not, is that we, the entire idea behind the Connect brand is to provide sound, unbiased advice.
I don't want to redo the phone call because, we covered it off at the time. But what impressed me was, as I said, within 30 seconds of talking to her, you helped her out and said, it's not, you don't have what you think. And the path that you laid out in order to help her was really impressive based on, the 3 seconds of preparation you had based on her questions. But, I mean, Justin, with your experience in customer service, it's great that you guys realize that, this is an alien environment for a lot of people. And it's one thing to say, why didn't you ask all these questions? But if you don't know the questions to ask, you just kind of sit there and nod.
Yeah, I agree. So, I mean, when someone calls into our office, the goal is to not just give them a mortgage, right? the goal is to give them a product that they're going to understand, that they can rely on us for information, and they know exactly what they're getting. I don't know how many times I have the collateral charge conversation with a client, and they're already in a product like that. They have no clue what I'm talking about. So
yeah, in the case of the caller from last week, it's easy to understand how she can be confused, right? Like you go into the bank and it's this idea of it's my bank. Like they're looking out for me. They got all my savings. It's the place where all my money is. It's the only place I'm relying upon for information. They're not going to steer me wrong. And if they do, then geez, like I don't even know where I'm standing anymore. And for that poor woman, she thought she had a home equity line and instead she had a 10-year mortgage product. And it's easy to see how trapped someone might feel. And it's also really, it's easy to see how isolated someone can feel. And the importance of this show, the reason why we're doing it is so that people understand that there's a lot of options. They're not tied to one bank, and they can be. They can be if that bank's offering them a great relationship with great pricing and great rates. But you're not tied to one bank. You got a lot of options. And if you get told no, someone else is willing to say yes. It's this, we have to understand, if you're sitting there thinking that no one's going to lend you money, this interest rate environment that you're in, and we were listening a little bit to the Alan Small show too, that this interest rate environment that we're in, this movement towards inflation that we're going into has so many different massive financial institutions clamoring for yield right now. That means they're seeking out ways to provide an interest rate return that is stable to their investors. We're talking about pension funds, insurance companies, and banks. So if you think that you can't get efficiently and effectively priced money for yourself, you're wrong. Stop listening to whoever you're talking to.
Yeah, but the problem is, and I can run this through every single show that I do, the reason that we have you guys on is because you know your stuff, backwards and forwards. The unfortunate part for the listener is that they don't, and therefore, you're right, there are a ton of options out there, but unfortunately when the listener's lying there at 2:30 in the morning wide-eyed because they went to the bank laughed them out of the building, and now they're home thinking they're going to lose their house, they don't know what they're going to do. They don't understand the options that are available, and that's part of the great service that you guys do by doing this show.
Yeah, I mean, if you're impacted by coronavirus, which everybody is right now, if you're impacted by job loss, which a lot of people have been, you need to know that there are other options, and it comes back to this theme that if you're only collecting information from one source, if you're only going into your bank and accepting what they're telling you as gospel, you're not doing yourself a service. And if you're taking that information and you're holding it in and you're getting frustrated and you don't know where to turn, you got to know that there are options out there. The federal government and the Minister of Finance and the Bank of Canada want you to know you have options. I'm going to give you an example. When I first started in the mortgage industry, there was an article, it must be about 18 or 19 years ago, and it was written, I think it was written by the former governor of the Bank of Canada, Stephen Poloz. And in the article, he lays out ways that the average Canadian consumer can gain access to the stimulus provided by the central bank. It's a really, really interesting article. It's about 20 pages, and I remember reading it and then summarizing it. As soon as I read it, I was so excited. And the real takeaways from it, number one, I'm a mortgage broker, so I was really excited about this. He said, the number one way that a Canadian consumer can gain access to the monetary stimulus that we inject into the economy is by using a mortgage broker. Because a mortgage broker will help them find the lowest cost capital for their home. Their home is their largest asset. The debt on that asset is the largest debt they'll ever incur. And any minute change in interest rates will affect that debt and affect their pocketbook. The second piece of that report, which was so amazing to read, was that the average Canadian consumer needs to spread out their banking relationships. They should not hold a credit card, a line of credit, a savings account, and a mortgage all with the same bank. The moment that happens, that bank less competitively prices products for that borrower, for that saver. They know they have
Hearing
them.
this for years, there is a belief out there that I've been with this bank for 35 years and I'm one of their most valuable customers. No, you're not. They know that you're coming back tomorrow. You're probably getting the least amount of attention of all.
Yeah, it's crazy. It's something so uniquely Canadian. We're so polite and we're so generous, and the unfortunate thing is that sometimes we get taken advantage of. And what's even more unfortunate is that the fox is in the hen house, right? Like, it's our banks and sometimes our telcos that prey upon that nature of ours.
You know, people out there are frustrated that they don't know the answers to questions that they have no idea how to ask. And just as I was listening to that, I was thinking, it must also frustrate you to a certain extent that people don't pick up the phone, call you, and just assume that they know what your answer will be. They assume that, you know, maybe their credit's not good enough. They assume that maybe the rate won't be good enough for them. There's a million assumptions that they make instead of picking up the phone, asking you these questions and allowing you the chance to help them out.
Yeah, I mean, something that I do really love about my job is being able to give these people the answers that they didn't think that we had, you know what I mean? And see their financial situation get better, because it is very common that, you know, people call, they think they're hopeless, they think that there's not an option for them. And that's just not true. You know what I mean? I would say pretty much everybody who picks up the phone and gives us a shout, there's definitely an option for them, and we can definitely put them in a better position. So,
yeah, it's almost like our Google reviews. Our Google reviews are great, but I think it's somewhat influenced because of how ungreat the banks are. Mm-hmm. So, like, you know, if you got really bad news and you call us, I mean, listen, don't get me wrong. We really just want to give people good news, but we're giving them the honest truth of their situation and what we can do or can't do to help them. And because it's reciprocated with good Google reviews and, you know, loyal clients and lots of referrals, that's amazing. But it's just because it's something that's kind of void, and, you know, we're filling a void in the marketplace.
You want to follow up, check out their website. Lots there. Cannect.ca. That's Cannect. Connect with an A. Or you can give them a call, 416-766-2666. Guys, there's apparently new stress tests coming to qualify, coming up on Tuesday.
Are you stressed about it, Ian?
I'm always stressed.
Listen, I'm going to tell you, don't stress. Okay? First thing, don't stress. We've been through this together already one time. It happened in January of 2018. And it was far, far, far more difficult than the one we're about to endure. So in January of 2018, we saw the first stress test implementation. It was because of something called the B20 rules, or the Basel 20 rules. And it stated that Canadians needed to qualify for their mortgage at an interest rate that was 200 basis points, or 2% higher than their contract rate, than the rate that they were receiving. What this did was it forced more thoughtful lending. It forced a consumer to qualify for their mortgage at a rate that was higher than the rate that was actually on their mortgage. So in that case, it meant that you needed about 20% more income to qualify for the same mortgage that you would have qualified prior to those rules taking effect in January of 2018. The ones that we have coming in on June 1st are a little more muted, and they represent about a 50 basis point, or 0.5% spike. Like right now, the previously implemented stress test puts us at a 4.79% stress test rate. And the new stress test rate that they're introducing is at 5.25%. So it's a pretty small increase. What it will affect the borrower with is about a change in 4 to 4.5% in their ability to borrow. And if you take the median household income in Canada, that means that they'll go from being able to qualify for about a $440,000 mortgage to a $420,000 mortgage. So it's not huge. And then the next question that anyone always asks is, what's going to happen to housing prices? Because really, I mean, it's like a freight train right now, right? Like housing prices, can anything stop them? Pandemic certainly couldn't. And I'll tell you, because typically when you evaluate things, you look at the past to judge what's going to happen in the future. If the introduction of the B20 stress test is any indication of what will happen with this new, let's call it the baby stress test that we're introducing, when they introduced B20, housing prices went up. And although we would expect housing prices to go down because people can qualify for a little less, I don't know if that's going to be the case. It seems like the idea of having low interest rates for a long period of time is really stimulating buyers. And I don't think that's a good thing. Like, just for the record, like, I know that we've been through a period of time with very low interest rates. Like, I've been doing this for 20 years now, and every year interest rates go lower. Like, isn't that crazy? 20 years, every single year interest rates go lower. I want to be a voice of reason right now, and I want to say that in the next 20 years, it might be a situation where every year interest rates go higher. So I want borrowers to be aware. I want people that are rushing to buy a house right now, never, ever, ever rush into any big investment decision. And everyone should be careful because interest rates are, we're doing 5-year rates at, 99 basis points on a variable rate and, 1.5 on a 5-year fixed. I don't know. They're very, very low. I don't want people to get too used to those interest rates because we're going to see interest rates creep up.
One of the things that you guys can do is help people figure out what kind of house they can afford. I can remember, and I'm probably going back a couple of decades now, but the banks all had these online on their websites because the websites were a big thing. And, they basically said, let's find out how much you qualify for. So with no other questions than, how old are you? How much do you make? And, what size shirt are you wearing? All of a sudden, they'd come back and tell you that, hey, you can afford a $750,000 house. And of course, being an idiot, I went, hey, I can afford a $750,000 house. And people are like, no, you really can't. That's not how it works. And I think that based on what you're just talking about interest rates, is really, really important right now. Because as you said, the last thing that you want to do is find someone in some difficulty later on because they didn't understand what they were getting into.
So first off, do not trust in bank pre-approval online tools. Mm-hmm. They do not account for the property tax of the property you're looking to buy. They do not account for the condo fees, the maintenance fees of the property you're looking to buy. They discount income levels. They are a tool to create leads. I cannot stress this enough. I can't tell you how many times we have people calling into our office a day to a week, hopefully before their closing date. Mm-hmm. And they let us know that they were pre-approved at their bank and their bank said no at the last minute. And there's this false sense of security that we need to do better as an industry at helping borrowers through this process. And that's why if you go to Cannect's website, there are multiple pre-approval tools, and they are not rosy, sunglasses as to what you can afford. They are what you can afford, because this is a critical service, right? Like, you don't know what you can afford, then you're out there shooting blind. Mm-hmm. It's a reason why we work with a lot of realtors across Canada that will use our tools to pre-approve their borrowers. So, first and foremost, the banks are getting better. I hope that they hold themselves to a higher standard, because dealing with customers online is the same as dealing with customers in person. And everyone needs to realize that. And you got to provide solid, sound, unbiased advice to them.
So we were talking before the show, guys. You mentioned you had an email that you wanted to bring up, Justin.
Yeah, absolutely. It was some great response from last week's show, and we had several people reach out. So I have someone here who said, my wife and I have been working with another broker to refinance my mortgage. As we have racked up some debts over the past year or so, my other broker mentioned that there is nothing that they can do for me because I work on an hourly basis. And he said because I didn't work most of last year, that there was nothing they can do for me. Does that seem right? And is there something that can be done?
I mean, a lot of people haven't worked last year. So first off, you're not alone. And it's not a reason that should hold you back from moving towards lower cost capital right now. Know that there's a lot, like, first off, great job on using a broker, right? Like, you know, a lot of people in that same situation would go to their bank and they'd end up with more unsecured credit. Yeah. Right. Like we spoke about that last show where, you know, you look for a solution from the place that you trusted to get your mortgage from, and you end up with, you know, more unsecured debt and a credit score that's dropping. In this situation, off the top of my head, I know we've got a few lenders right now that are more aggressively working with borrowers like this, where, for example, they'll take a 3-year average of their income instead of relying on a kind of more common 2-year average. So we know there's going to be a downward trend for income for people that are, you know, in the service industry. Especially like as they're hustling to try to find another role for themselves, another way to, you know, put bread on the table. So know that there are lenders, and not just any lender, A lenders with A rates that are taking into account people who are earning less on an hourly or annual basis right now. Also, I mean, I think that, again, there's not enough information in that to unpack it, but I think that if you consider that there's always going to be a wide variety of options, and depending on the time horizon of the borrower, I think that's really kind of important to highlight in this case. Like if they anticipate being back to full steam, and I know like there's a lot of external factors that would influence that, but let's assume that Canada's going to be back on track in, you know, 6 months. If they assume that they'll be back on track, then we might be able to help with a short-term bridge solution that brings that credit score back to where it needs to be, that we can coach them along the way to make sure that their bank statements, their income is representative of what an A lender needs to see, and then get them back into A borrowing. So again, there's a little too, we need a few more details in that, but what I mean to say here is that there's more than one solution here, right? There's more than one way to help those borrowers get to lower cost capital.
Absolutely.
Yeah.
Ian, is there a call? I see.
Yeah, there is. We can talk to Laura. Let's do that. Laura, good afternoon. Welcome in.
Hi.
Hi, Laura.
So I've been trying to get into the market for a while now, but I just haven't really found what I'm looking for, like the one. So I'm seeing now in the media that there's all of these increased qualifying guidelines, and I'm wondering if you can just shed some light on what that might mean for me, and if I can avoid that at all, because I just don't want to get priced out of the market.
Okay, don't rush. First things first, like, I don't know if you were listening, we were just talking about this. Like, don't rush into the market because of a Tuesday deadline for qualifying. On Tuesday, the new stress test takes effect, and it's going to impact your ability to purchase by 4 or 5 percentage points, but do not use that as an impetus to move into the market. Understand that there's, like, even that stress test, for example, you can go to a credit union in Ontario. You can get the same interest rate, and you can qualify at the contract rate, not the stress test rate. And a lot of them have really competitive products. We can help you navigate that. What I would say is, no one can find the one right now. Like in order to find the one, I think you have to adjust your budget to that of some type of multi-millionaire. The types of real estate that are hitting the market right now are the beautiful house with a train running through the dining room, right? Like it's a tough time to find the perfect home right now. And, everything in Canada is kind of in upheaval, and you should wait a little bit. You should try to find the thing that you want. I don't know, I don't know what you're paying in rent. I don't know what your budget is for a new home. There's a lot of kind of details that we would need to unpack, but I would say that making a rush decision on real estate has probably really served a lot of people well over the past 20 years. But we're in a period of time right now where I don't know if that kind of, if riding that wave can continue.
Okay, thank you so much.
Laura, thank you for your call. You brought up a really interesting point during that call, and it twigged with me, and that is that financial speak to the layperson can be really confusing. When you're talking about it going up 4 or 5 basis percentage points, you don't mean it's going to go up by 4 or 5%.
Yeah, basis points, like, 0.4%.
Exactly, but when you hear 4 or 5, I can't remember the way it was phrased, but it was like, oh my, and then I thought it through and went, there's no way it's going up that high. I'm sure they'd like it to at some point, but that's not going to be today, that's for sure.
Right.
Yeah, 0.01%. Yeah.
You touched on something else just before Laura's call that I think an awful lot of people need to hear, and that is that you appreciate and recognize that this last year has been very, very different, and especially for someone who has been, sometimes just vigorously protective of their credit rating, vigorously checking it and using all the alerts and all that stuff to make sure that it's as good as it can possibly be. Through no fault of their own, they've hit a bump, but you're willing to take that into consideration when you talk to them.
Yeah, of course. Listen, of course, right? So Cannect, the whole idea behind Cannect, the genesis behind the business is connecting the borrower to the investor. So we have our own fund, and we use the capital in that fund to find good borrowers that are a little shy of getting back into the lower cost capital that they need. So we can readily identify the characteristics of those borrowers. We want to help. We got a ton of capital, and our goal, like our mandate, is to use that capital to help borrowers get to lower cost capital. And it's this thing that we spoke about in our last show, right? It's this motivational alignment. Anytime that you can figure out a way where everyone in a business ecosystem has the same motivation, right? Our borrowers want to borrow money and they want to solve a problem. They want to get to cheaper money. Our agents are on salary and they're here working to help people get from the situation they're in to a better situation. Our investors who invest money with us and trust us with that money, they want to see their money come back and they want to make a return on that money. They don't want to take risk. And we are the custodians of that money, and we're the custodians of the future of our borrowers' borrowing ability. So if you can create this relationship between everybody where all of our motivations are aligned, you can win, you can be successful. And that's what you're seeing. That's what's coming out right now.
Before we get to the next call, guys, one of the things that we talk about is, the tagline, when the banks won't help you, Cannect will. For someone listening who's maybe, we say it and they didn't quite get it, they didn't quite grasp it, you want to explain just for a quick second, and I know we went into it last segment, but I want to really make sure people understand it, just how you can help people that the banks may not be able to.
That's a good tagline, eh?
I like it.
I didn't even know if that was one of ours, but I'll tell you, it's really just, we've got a whole bunch of great people. All we do is learn about, talk about, and think about mortgages. And we are here to help Canadians. So we want to use the amount of knowledge and the amount of information that we're collecting to help people. And if most of the time that just results in them getting a better deal, but some of the time that deal happens to be with us, we're happy. And for 20 years, we've been working on this exact same premise, and it's working. So, you kind of put out positive vibes and you help everybody whenever you can. Sometimes you get disappointed. Like, there's, instances when you can heap on so much information onto people and they end up going back to their bank. But it happens, right? Like, all we want to be out there is we want to be this source of unbiased information that Canadians can rely upon. And we've been successful at it, and we're going to continue to be working on it and being successful on it going forward.
To find out more, check out their website. It's cannect.ca, CANNECT.ca, or you can give them a shout, 416-766-2666. We talk a lot about the borrowers. An interesting question from David this afternoon about the other side of that. David, good afternoon. Welcome in.
Good afternoon. Yeah, I just wanted to recap you were saying regarding the slowdown. I'm a registered real estate broker. Been in the business since 1968, and I've also been a mortgage broker for quite a few years. The main problem we're having to contend with in our real estate board, which stretches from roughly Grimsby down to Fort Erie, is the unbelievable amount of people from out of town and from other real estate boards. Approximately 40% of all the business that's happening in our area is out-of-town brokers and agents. And people are trying, with COVID, they're trying to get out of the city, and it's having an unbelievable impact on our local people because they just cannot compete in the bidding wars.
You know what, David? You're right. There is this microeconomic event happening right now. As a result of the pandemic, we're seeing a lot of migration out to suburbs. We're seeing thousands and thousands of homes being built in that Niagara area. But I can assure you, reversion to the mean will occur. People are going to move back to cities. So what I can say is any attempt to control these migratory patterns or the way capital is moving right now will fail. Just like I said, this move to add a 50 basis points into qualifying for mortgages is a tiny little speed bump on the massive highway of the Canadian real estate market. David, who's going to stand in the way of a $4 trillion marketplace? Right? Like, that's what Canadian real estate is. There's $2 trillion in mortgages in the residential space alone. It's just the numbers are too huge. The amount that's moving is too much. The only thing that I worry about is the psychological impact of seeing interest rates begin to rise and then rise a little bit faster, and what that will do to real estate prices. I think that in this time that we're in, like, Dave, you're a real estate agent. You've been doing it for a while. You're a mortgage broker too. If I were you, I would hang up a really nice website, and I would say that your name is Dave. You were born and raised in Grimsby, and you are the guy that anybody from Toronto or the GTA area should speak to about which neighborhood, whether it be Pelham or Jordan or what area in that Niagara area they should move to is the best, and use your expertise to differentiate yourself from your peers and the people that are bringing buyers from Toronto. But I tell you, those buyers are going to start slowing down, right? Like, there's a lot of, we're humans knee-jerk react. It's unfortunate, but it's the way things are. And there's people that are going to be making money in the short term right now building houses in that area. But I can assure you that when the boss says, hey, it's time to get back to work and your job is in Toronto, people are going to be commuting on the QEW a little too often, and they're going to get a little more stressed out. They're not going to want to be on the road that often.
My itchy trigger finger aside with David's call there, I wanted to get to an email that you have there, Justin. As I said, leading into it, we talk an awful lot about the buyer's side of things, but there is another really interesting and pretty exciting angle that you got an email question about.
Yeah, absolutely. So this gentleman, Bruce, had emailed us just after the show last week, and he had said, so I was listening to your show on 1010, and I didn't have a chance to call in. My property is currently mortgage-free, and I'm retired. I have all this equity, but not much of a pension. You mentioned investments while you were on the air. Is there something that you can suggest?
I always have to be so careful in how I answer these questions. So I want to say, first of all, that the OSC does a really good job at protecting investors. And the thing I believe that the OSC wants us to explain any single time we talk about investment advice is, number one, investments are risky. Number two, historical returns are no indication of the future returns of a business. And from there, I can explain to you that Cannect, for the last, almost 20 years, has been providing a return of about 8%. Okay. Cannect is built on the premise of being direct, of connecting an investor to a borrower. So save for the fact that I've got all my money in Cannect, that my mom and dad have all their money in Cannect, that, the people that work at Cannect are invested in Cannect. There's a lot of great reasons why I want people to invest in Cannect. I want people to invest in Cannect because we're not trying to shoot the lights out, right? You can see we're returning 8% on an annualized basis. We pay it monthly. We pay it to all of our unit holders. But what we're doing with that money is what's really, truly special. And you can hear it on shows like this. You can see it on our website. We're helping Canadian consumers who are, and the term, we started talking about it recently, but the term is newly non-bankable. They're newly non-bankable. They just found out they weren't bankable. They don't understand why they can't get what they need from the bank. And we're giving them the capital that they need to get back to the bank. So if you are sitting on a house that's appreciated in value and you got a ton of equity in it and you're contemplating a reverse mortgage, you got to think to yourself that there are other options out there. Just the same way that borrower who can't figure out how to get more money, doesn't know where to turn, you've got more options.
Marcus, this is a good way to end this. I'm right up against the wall here, but
no problem.
Did want to let you finish there. Gentlemen, thank you so much for joining us. I really appreciate it. Marcus Severus, principal broker Justin Turner joining us. Get approved for a home equity loan in 60 seconds. You can secure a low interest rate loan by tomorrow. For more information, visit cannect.ca. That's CANNECT.ca. Or give them a call, 416-766-2666. 416-766-2666.